Welcome to the Sip and Scale podcast, where we talk about everything business, entrepreneurship, and startups. My name is Blendi Muriqi. I'm the CEO and founder of Delegate.co. Each week, you'll join us as we talk with industry experts and business owners, sharing actionable insights to drive your business forward. So grab your favorite beverage and let's sip our way to success. Hello, everyone, and welcome to another episode of the Sip and Scale podcast. Today, I have a special guest. This is a very interesting time to be in the real estate space. It's a very interesting time to be an investor buying small businesses. And today, I have someone that is a pro at it. Mr. Don Spafford, welcome to the show.
Thank you. My pleasure to be here.
This is an interesting conversation. Don has an impressive career, transitioning from nearly 2 decades in corporate finance to becoming a full-time real estate investor, building a portfolio that includes unique assets like RV campgrounds and build-to-rent communities. His approach to real estate isn't just about the numbers. It's about creating passive income streams and achieving financial freedom for his investors, which is something I know a lot of us are striving for in life. What's particularly inspiring about Don's journey is how he leveraged his finance background to identify and capitalize on opportunities in the real estate space, all while navigating major economic trends and challenges. Whether you're a seasoned investor or just starting out, Don's insights on balancing short-term cash flow with long-term equity growth are incredibly valuable. We're going to dive into all of this today, so please join me in welcoming Mr. Spafford to the show.
All right. Thank you very much. That's quite the introduction there. Very, very grateful. Thank you.
Awesome. Let's get started. We got in touch with each other via LinkedIn. By the way, I love the name of your company, Beyonder. It's got plays on a lot of different things. I want to first start off and talk about your roots in the finance space. How did you end up here where you are today in building this portfolio of real estate holdings? What were your roots?
Yeah, thanks. I'll say that I guess even in my vision at some point in the past, as you mentioned, I worked for almost 20 years for a financial company. My background, my education I went to school for was all around finance. I actually have 4 majors: finance, banking, accounting, and investment science and portfolio management. So the goal with that was I wanted to become a financial advisor, a wealth manager, somebody dealing with investing people's money. The problem was for me is that unfortunately I was going to school part-time as I was raising my family. And by the time I finally finished was 2008. Very bad time to graduate with a finance degree. All the jobs I was hoping to get were all kind of just disappearing. And so luckily, at least I had a job already. I was already getting with this financial firm at that point already about 4 years or so. That actually paid for my education, luckily. So graduated with no debt. Hopes and dreams were kind of just vanished kind of overnight, I guess, in a sense. I was planning to go on to get a master's degree, but I was like, well, what's the point? There's no demand for that. It'd be a waste, So I kind of just put my head down, I guess, in the sand a bit. Was happy to have a job. At least I had job security, but definitely was not what I want to be doing forever. And unfortunately, as happens for most people, life happens. Just time goes on, right? Time passed by. And eventually, I was in that job for a lot longer than I'd planned to be. But what got me into real estate, though, was a couple of things. First of all, it was partly my wife, which I'm wearing her shirt today, so props to her. If you're looking for a realtor in East Idaho, contact Maria Spafford. So she became a realtor around 2012. We were still living in Omaha, Nebraska at the time. And some of her very first clients were investors. They were buying these properties, that time, basically pennies on the dollar, really, and doing what's known as the BRRRR strategy now, refinance, repeat. They were doing this and just kind of blew my mind. It's like, wow, you can do that? I didn't even know that was a thing. And so I was like, I got to learn more about this and understand how to invest in real estate. And so I started reading books and figuring out what to do, because it's very different, obviously, than stock investing, which is kind of more of my education was about analyzing companies and stocks and doing all that. So by the time I got into it and ready to jump into real estate, we actually decided to move from Omaha to where we're at now in Idaho. So I kind of put all that on hold until we got here, got settled in, waited about a year, and kind of still had that bug or kind of urgency. I wanted to do this. And the other contributing factor, I guess, besides just seeing the opportunity, was more of, I think most people realize as your kids grow, expenses go up, right? Kids are not cheap, and we've got 4. So as those expenses were growing and my income wasn't really keeping up with that, I was like, this is getting challenging here. I don't want to get a second job. I don't want to go back to school. And so I was trying to find what's another way we can create additional income that wouldn't require so much time and effort. And so also playing the factor was that I kind of realized real estate can provide that income and grow well over time, probably more so than just about anything else you could do, other than maybe starting a business that could do well. But I didn't really have the time or really experience or know-how, I guess, how to do that at the time. So I was like, real estate sounds like probably the best way to go. My wife being a realtor and from things I've already learned and understood, it just seemed to make sense. So that's kind of what we went into that. And also with the thought is that down the road, if I get these cash flowing properties, not only could it hopefully replace my income, but more short-term scale. I was thinking, okay, well, it can help pay for my kids' college, help support my mother. The reason we moved to Idaho was to help take care of my mother, so it could help have additional income to help support her medical needs and things. And so it's kind of more thinking of these, more near-term needs more than the long-term wealth building, really. And so I was like, yeah, I got to try to scale this as quickly as possible. So yes, we bought our first property in 2017, was a fourplex. Just because at the time, at least for me, I understood that more doors was, for me, less risky, first of all. I didn't want to have a single family home that when it's vacant, I've got to cover that mortgage. I've got to pay for all the repairs and things, which could wipe out a full year's worth of income. So the more doors, the better. And at the time, the most I could do was 4 units, which still counts as residential, to get a residential loan. That was actually to my advantage because I found 2 things that helped me to do that. One, I discovered or realized that I could take a loan from my 401k. So I borrowed from my 401k for that down payment. So I didn't have enough in my savings anyway. And then I also leveraged a local lender in my area, a bank that would do a 10% down payment for investment properties. So I used a 10% down to buy this fourplex. And it was kind of funny because at the time, this was early to mid 2017, right before things really started to hit real estate because the person's selling it. So I found it on Craigslist. So for sale by owner on Craigslist, this fourplex, built in the late 90s, great condition. And at the time, met the 1% rule, which for those who don't know what that means, it's 1% of the purchase price is the income. So kind of keeps up with that and makes a good investment. I actually think it was 2% rule. Anyway, whatever. At the time, it made sense. And so the numbers worked. And I was like, okay, I'm going to take this loan for my 401k. I'm going to buy this property and we're going to just go for it. And it was probably one of the scariest decisions I ever made because I was like, this is a pretty big risk. If this blows up my face, I'm screwed. I didn't have savings to handle it. But luckily, I was like, I trust the numbers. My analysis looks good. This is going to do great. I know I can get the rents up. I'm going to make this better. And so we decided to just go for it. Took that dive. And looking back, it was one of the best decisions I ever made. That fourplex in the next few years, as that got in right before that, things exploded. That property appreciated so much that the value of that property, the equity in it at that point was, I think, more than what my 401k was after, like 15 or so. It was definitely worth it. And luckily, since then, I've actually refinanced that property and pulled out 6 figures from it to reinvest in other things and keep that growing. And why that property is still cash flowing now. Anyway, so yeah, it was a great starting point for me to get things going. And that was, again, the motivation was just to find a way to produce more income without having to work more hours to do it.
When you're analyzing, I think a lot of people feel that they feel scared doing their first deal because they're looking for the best deal possible, right? And they question themselves and ask themselves, oh, maybe I should look for another deal. Maybe this isn't it. What advice would you give to those people that are like, they want to pull the trigger on this, but they keep passing on deals because they're looking for that perfect one?
That's a great question. To be honest, when I found this property, I had probably already analyzed 100 properties before it. I kind of got in that mode that I was kind of building up to that point as well. I was like, I want to start analyzing dozens of properties every week just to, 1, get used to the process of that, 2, get familiar with the numbers and what to expect in the area. So I kind of felt confident when I found a great deal. I'd say, I know this is good because I've already looked at 100 others, right? So first of all, I'd say there's no problem with somebody wanting to analyze and go in depth and compare, but I would say make sure you do that consistently. Don't just do one and assume that you found the right one on your first try. Definitely analyze quite a few, get familiar with the process, even if you have no intent to buy. You got to the point for me, I could quickly just look at the rents and the price and just know like it's not a good deal or that might be worth looking into. So the more you do it, the better you'll get at it. But definitely it's going to be, especially in today's times, it's going to be probably, I'd say impossible to try to find the perfect deal, right? What you need to find is something that's going to be good enough for now to start with. Because even if the numbers aren't where you want it to be, over time, those rents are going to go up. Your mortgage is going to come down as that gets paid down. So there's opportunities for that to continue to grow. And of course, the appreciation is going to go up on it. So you're still going to end up making some good money on it, most likely. Or, there's always things that could happen. There's a risk in everything, obviously. But yeah, trying to find the perfect deal while you're passing up on very good deals is probably a mistake because you're not the only one looking. So there's going to be somebody else looking for that perfect great deal. And so when you finally find it and you're going to make an offer on it, they're going to get probably 20 other offers that are going to outbid yours. So you're going to still feel left out. So you might as well grab something that's good enough for now and get that ball moving and get started, because getting started is the hardest part. Except for me, it was getting past that fear. Once I got past that fear, it was the doors were open, the gates were flooded, opens. So just go for it. Find something that's good enough, works good, at least is cash flow positive. Don't buy something that's going to be cash flow negative unless you have the funds to sustain that maybe, but find something that's going to cash flow at least good enough to start with, and just trust and know that you can get those rents up most likely. And as long as you can get it managed well, then it should do well for you to at least get started, and then things will scale from there pretty quickly.
Awesome. You mentioned managed well. Did you go into this first deal being a landlord yourself, or because that also takes a certain level of skill set when you're just getting into the real estate investment space. You might be able to analyze a deal on paper, but there is a plethora of different things that come up managing a property that you may not have been used to. So what was your approach with that? Did you just outsource that, or did you have to bite the bullet and become a landlord for the first time?
So in my case, I actually chose to manage it myself. And keep in mind, this property is about 45 minutes away, right? So it's not like a quick drive to go see it. It's a bit of a drive, but there was a couple things. So for me, first of all, I've already had heard of and seen many cases where there was very just bad property management. A professional management company was managing these properties. Like my wife being a realtor, she actually listed some of these for sale. And so when we mentioned to the owner, hey, there's these problems that should be fixed, and like, well, the property manager was supposed to take care of that like a year ago or something, so we're like, well, yeah, they didn't apparently. Anyway, so I was like, so for me it was two things. One, I wanted to get familiar with the property, I wanted to know everything about it and the tenants before handing it off to a property manager, just so that in case they come back at some point and say, hey, there's this and that problem, I'm like, no, that's not a problem, I'm familiar with my property, right? So I wanted to get to know my property and the tenants to kind of have a feel of that. But also, second was finding a trustworthy property manager, and that's going to charge a fair amount. I was kind of a little bit less trusting because of I'm here. It's like I can do it. And kind of to build up to that, I read books about property management and did all these things that for me were the steps needed to properly screen a potential tenant, find the right people. So the property I manage, I actually do manage a few others here in this area for other people. I guess extensive screening up front to try to put the right people in there to start with. And I've never had to have an eviction. I've never had anybody trash a property. I've never had anybody not pay on time. So I try to get rid of all that in the front end, not have to deal with it later. And luckily so far, that's never been an issue. I have had properties out of state where I'm not there, so I did have to hire a property manager to handle it. And unfortunately, it didn't go as smoothly. There's all kinds of problems and expenses to pay for, repairs and evictions and all these things. And then on top of that, they're charging their property management fee, and then they're making more on that property than I was as the owner. It was like, kind of felt like getting scammed there. That was for me, as like, what? So for my own properties, like, I want to, as long as I can, I'm here and I have the time for it, I'm going to manage it myself, because honestly, once you put the right people in place, there's really very little time it takes to actually manage it. You do a couple of checks here and there a year, and as long as they're paying on time and things are going smoothly and can drive by the property once in a while and make sure it's all good, there's really not a problem. So it doesn't take that much time to do it. Just a little bit of time on the front end. Every time you have a vacancy, someone move out and you got to replace somebody, then yeah, there's a little bit of work involved there, but still not too much. Most of that you still outsource somebody, clean it and get it ready. But then when it's ready to rent, not too hard to find good people if you take time. I've actually contacted a couple of property management companies in the area that have properties they're managed like right next to mine. And this was again a couple of years ago, I think. I asked them, how much would you charge for these apartments? And they gave me a price. And I was like, well, I'm already like 40% above that. And I'm able to rent them no problem. And they're like, well, it's like, why do you have yours so low? I was like, we like to get them rented pretty quickly. Again, I still charge more and I get it rented quickly. So what's the problem? So I was like, well, I'm going to pay you to manage it and you're going to charge less to rent it. That didn't make sense to me. So I'm like, I'll keep managing it. So it hasn't been an issue so far for me. At one day, I likely will hand it off at some point or just sell it. When I do my analysis, I always, of course, include that property management expense in there just to make sure one day when I do hand it off, that's already accounted for. So it'll still make sense. If you don't account for that, you think, oh, I'm going to manage it myself. So you remove that completely from your analysis. So then later when you do want somebody to take it over, maybe the numbers don't work as you didn't include that in your expenses.
I saw this trend. I saw a lot of real estate influencers over the last, specifically around like COVID time. A lot of influencers sprung up that were really selling this, buying out of state properties, finding good deals, buying them out of state. Yeah. And they were marketing this towards like urban center investors. Maybe they have a white collar job and they're trying to get into real estate. Would you recommend for someone that's just starting out to invest in properties where they live, at least in like an hour vicinity radius of where they live? Or do you think that it is possible for someone to buy something out of state, find a competent, good manager, and then just hand it off to them?
It's hard to say what I would recommend per se, because everybody has their own, the saying, if I don't get it wrong, it's like, live where you want, invest where it makes sense, right? So maybe where you live, it doesn't make sense to find something there because it's just too expensive or the laws aren't favorable. So yeah, it all depends on, I guess, where you live and what you're comfortable with. For a lot of people, it might be hard to do something long distance, especially for your first investment. For me, kind of part of my fear, I guess, when we were initially in Omaha, I was ready to try to find something to buy in Omaha, knowing that we are going to move. I was like, I don't want to have a long distance property to start with. That kind of stopped me from buying it back then, but I probably could have did it and been fine, but just still that fear of having something long distance was too hard for me. Once I got that first property, I was kind of more open to pretty much anything. And I'd read some books, like people may be familiar with the book Long Distance Real Estate Investing by David Green, maybe. I read that one, years ago, and there were some good insights in there that helped me realize, what difference does it make if it's here or elsewhere? As long as that I've got trusted inspectors are going to view it, they probably know better than me if I saw something anyway. So trust the inspectors. And then the main thing would be, I guess, for the reliable property management is to ask around, right? Get referrals from people you know. If you don't know, I guess, get on LinkedIn or Bigger Pockets or somewhere and ask people, who would you recommend as property management in so-and-so city, right? And then get some referrals from people and call them up yourself and talk to them. There's a few that, over the years I've spoken to in different areas where I never actually bought anything, but I did speak to some managers. I found a few that would probably be very, very good. So if I ever got around to buying something else elsewhere long distance, then I would do the same. Just ask around, find the people that have used and who they have done good for them and go that route.
The key there is that your openness to utilizing third party, it came after you actually took that leap of faith and started getting your feet wet. I have the mentality that, especially if you're starting in something new, a foreign industry, you're starting in real estate, do the work first so you understand what it takes to put in the work, whether it's handling renovations, third-party management. That way, in the future, as you scale, you now know what to look for. I call it like you build a bullshit radar. So you're not going to have some management company telling you, oh, this is the reason we haven't done maintenance here, or this is a problem that we're having because you've done it yourself.
And there's been cases, people I know that have had properties where their manager says the HVAC went out, it's going to cost, $10,000 to replace it or something. And he didn't live nearby, but he's a pretty handy person himself. I'll drive out there and I'll be there tomorrow to take a look at it. And then of course he says hours later, they respond back and say, oh, we got it fixed for like, $700. And it's like, okay. So unfortunately, there's some shady people out there that trying to capitalize on somebody out of state to take advantage of them.
Taking advantage of people's ignorance.
Yeah. And assuming you're long distance, what are you going to do about it? So hopefully those are very few and far in between and don't stay in business too long if they're like that, right? So if you do the work, like I said, do some research and find good referrals from people, to find some reputable property managers, then you should be okay. Again, that's kind of part of the reason I guess unintentionally became a property manager myself. Besides my own, like I said, I manage a few here locally, is that some friends of ours were moving away and wanted to keep their home and rent it. So I can manage it for you. And then I've picked up a few more from my wife's clients that it's like, I'll treat it the same as I would mine. I'm not going to overcharge you for things if I don't charge up for anything. A lot cheaper than what most others are charged, because I'm like, I know that myself, it's not going to take that much time to manage it. Getting the right people in place is the most important thing. Get that taken care of and the rest is fairly easy. So I charge a lot less than others do to make sure that the owners are still earning money on the property more than me. And I'm just kind of doing it for almost more of a favor in a sense, because I don't really charge a whole lot to do it, but I don't mind it so much, honestly. But at the same time, I keep it pretty small. I'm not doing like hundreds of properties. That'd be way more than I'd want to do. If you find people that actually have, it's hard to say, because sometimes there's advantages to have those very large management companies that manage thousands. At the same time, there's advantages to the ones that are smaller that have maybe more time to dedicate to yours than just treating it like another number, basically.
Yeah. They're actually going by every once in a while, viewing it, whereas there are property management companies with thousands of properties that they inevitably become very hands-off. So they're not seeing everything you see, for example, as a smaller operator. As you've built up a portfolio, I'm sure that you transition from doing everything yourself to building a team. Walk me through that process. What have you done in terms of delegation to maximize your time so that you can focus on growing your portfolio, doing more deals, and moving the ball forward?
If you ever get to the point where you want to scale, you definitely need partners or a team. It's almost impossible to do on your own after a certain point. I mean, certainly you can if you want to take a lot longer to do it maybe and deal with a lot of problems along the way. But so for me, I guess my first scale, would say once I got past doing my own deals, I did a JV deal, actually 2 JV deals with a couple partners and a couple different partners on each of them. So it's kind of one of those things that, I found the opportunity. So that's kind of was always my, my strong point. It was like go and seek and find great deals, and then it gets to the point where, okay, this is more than I can do on my own. Let me now find somebody that has the resources to join up with me and do it. And so I started with that, just starting with the connections I had, and would reach out and say, hey, I've got this opportunity. Is this something you'd be interested in? Somebody I spoke in the past, maybe they told me what they're looking for or what they want to do. And so I kind of start with them first. One of these other deals I got was actually a guy, I got the deal under contract, but I didn't have like a close relationship with this person, but I knew they were in the area. So I sent him some information about it. Hey, you're in this area. What do you think about this? Is this a great deal? He liked it enough that he's like, yeah, I like this. And he had some private lenders that he had been using. He's like, I probably could bring somebody to bring the money to. And so kind of through him, we formed a partnership, purchased this other deal there. And so some of that is just more of just, you've got to have that network, at least start building a network, even if it's a small. Again, this was long before I was doing anything really commercial real estate. And so I wasn't active on LinkedIn. I was not active on social media at all, honestly. I didn't ever want to be clear. At that point, the biggest network I had was on BiggerPockets. So I was kind of started there and going to people I knew there. Eventually, when I got into more commercial real estate, when I was trying to scale into bigger things, multifamily and now the RV stuff and everything else, that's when I got active on LinkedIn and started to build a network there and go to a bunch of virtual meetups to get to meet people, and things started to grow, I guess, organically from there. But yeah, it was more of when I was trying to scale up. I wanted to get out of buying fourplexes and doing these other smaller stuff. It's like I want to get into these big, multi-million commercial. Initially, the plan was in multifamily is where I kind of started actually. And so kind of the same thing. I reached out to the network I had, people I knew that were doing it, and contacted them, had some calls, kind of just talked about things I could do. What could I do to help you? And start from there. One of the first ones I did was they said, well, can you help us raise capital? I was like, I can try. I'd never done it before. Then my JV JV deals, but I was like, I can try for sure. And so I started doing a little bit of that. I did a little bit of private lending for one of them. And then just as you again continue to grow and network, I got to the point where I was shortcutting the story for how I got into the RV campgrounds. But as I got into the RV campgrounds, started looking for opportunities for that and started trying to find people in that space. And I built out, I was reaching out to people that were doing it. It's like, hey, I'm looking for people that want to buy campgrounds, maybe in Idaho or something, and be the boots on the ground for that was how I first got into it, really. But I was commenting on social media, posting things, commenting on other people's posts, talking about RV campgrounds, and somehow in that process, I got connected with a couple guys who are now my partners with Beyonder. They too were just getting started. They had already kind of decided they wanted to be in that space. They actually just bought their first property, and kind of same as everybody realized, like if they want to scale it, they're going to need more people to the team. And so literally within months of them buying that first property, we got connected and kind of talked about our goals and what I was looking to and all that. And so we talked and had this kind of discussion. That thing seemed good. We all aligned with our thoughts and goals. And so we were just like, hey, why don't we just team up and do this together? And so that's kind of how I got involved there. Again, we'll say sort of accidental by being active on social media and commenting and trying to find people that were doing what I wanted to be doing. And kind of similar thing with the Build to Rent group I'm with. That was actually started back on Bigger Pockets years before this, where they had an opportunity that they were looking for investors, and I contacted them because they were local to me. We just kind of started a connection at that point. Then years later, things progressed, and I got more into now commercial real estate, and I had just done my first podcast, I think. I was like, hey guys, if you're still looking to do some stuff, at that point they were just doing build to sell. They were building stuff and selling it off, and I kind of mentioned, why are you guys selling everything? Why not let's hold these long term? You'll make more in the long run. You'll pay less taxes. And they actually agreed, and they're like, hey, that's a good idea. And so I got involved with them, made that transition and shift, kind of gave my influence of built to rent versus built to sell, and scaled up from doing not that they're doing small stuff. They were doing like a lot of townhome communities, 30 or so townhomes at a time. But now we're doing a lot bigger stuff, 400 to 600 door, complexes. And so making that shift definitely made a difference. And I was able to bring in my experience and insights from even though it was brief experience at that time, but the experience and knowledge I'd gained from syndications and talking to other syndicators and learning all that process and things to help share with them, because they had not really done syndications. They were just more of private loans from family and friends to build these. And it's like, well, if we're going to be doing these big developments, we need actual investors, right? So we made that shift, and I was able to get my experience and network, make that happen. And so it's kind of more, I'd say, when you're looking to build a team or become part of a team or something, it's first of all, find what you are good at. What's your, as people call it, your superpower. What can you offer to bring to the team that they don't already have or that they need more of? And then find people that align with your beliefs and goals and vision, so you don't have problems down the road. There's been plenty of partnerships I've heard of where people get together because they want to do this deal, but they're just, opposites or something. And at some point they eventually, have disagreements, and they fight about stuff and fall away, right? So I try to not have that kind of a problem. I'm pretty easy to get along with, which is good, but I want to make sure I find people that are of similar mindset, I guess, that aren't just in it for the money only, right? We'll say that there's more to it. There's more purpose behind it than just trying to make some money. Usually in most cases, that's, at least for me anyway, that's worked out pretty good so far.
I've found that, especially when building partnerships with other people and doing deals, real estate deals with other people, finding someone that has, you might have some sort of skill set that you have where you're not as good in this area as you are in another area. And so finding someone that can complement that usually leads to a really productive arrangement. You see this a lot of time actually in the technology space, when in startups where you have two co-founders, they're building a business. You have one person that's really tech oriented, that not so much business oriented. And then you have their co-founder that's the opposite. They're not tech oriented at all. They're very business minded. And so they work together very well because they complete each other. In your case, you didn't have a building background, but you had the financial background and you knew how to structure these deals, and you needed them. Together, you guys can make great things happen that otherwise wouldn't.
For sure. And I'd say actually one of those JV deals I mentioned earlier on actually was a ground up development. So I did have a little bit of development experience prior to getting to it with these guys, but definitely not to the level they were doing. But at least from going through it for myself, I can understand more the process of, how things take a lot longer than you anticipate and whatnot. So I've been through that on my own at a smaller scale, but it's definitely one of those things where, like I said, it just we're complementary and doing things that people enjoy, which is kind of funny because for me early on, when I first was getting started with all this, I was very much an introvert, very, very shy is maybe the right word, but I got anxiety talking to people and talking to strangers and things in the past, right? But I thought my strong point would be the financial stuff. I was like, I can do the analysis, I can do the underwriting, no problem. But as I got into it and started doing those things on both sides of that, I realized I didn't enjoy doing the underwriting, honestly. It was just, I don't know, it felt too much pressure, and I was like, it wasn't fun. And then I discovered that as much as I had in the past anxiety talking to people, I realized that talking to investors was actually enjoyable for me. It made me feel good. If we were to have a conversation about just small talk, chatter, talking politics or whatever, I'd probably be pretty quiet and not have much to share. But I discovered, talking about personal finance investing, all that kind of stuff. It was enjoyable. I enjoy talking about real estate and investing. And so I was like, I actually surprisingly enjoy doing this. And so I get to now talk to people all day long. I don't get so much anxiety from it. A little bit sometimes. I've done like over 100 podcasts at this point as well. That's kind of past that fear, gotten out of my shell, that you get to that point where you feel confident that you can do it. So it's not a big deal. So I actually enjoy having those conversations with people to share with them, mainly because it's something new and unique they haven't heard before, most likely, right? There's not a lot of people that have heard about investing in RV campgrounds or even some build to rent or some other things I'm doing. It's enjoyable seeing the look on their face and their excitement as I talk to them about these higher returns that they're seeing in other stuff they've been investing in. I just found that I really enjoyed doing that.
It's like anything in life. There's a muscle that you have to flex long enough, and then that muscle grows. You become comfortable on camera. You become comfortable because that's something that very much was foreign to me. The idea of just posting about what is happening in your business life or talking to people openly about it. But the more you do it, the easier it gets over time, and it becomes fun because it becomes an opportunity also to network with new people, find shared interests, find shared opportunities to work together. Let's talk about RV campgrounds, because there are so many different real estate directions you could go in when investing. Commercial real estate, industrial. You could go the route of single family, investing in single family homes. Who told you about RV campground? And was it something that came out of the Bigger Pockets community? Was it something that you just stumbled upon yourself when looking at specific deals? How did you become the RV guy?
So going back, first of all, it wasn't on my radar at all. Again, I was more focused on multifamily at the time, even though, but for me at the time, this was now early 2021, basically, where the multifamily deals that I was looking at and trying to find underwrite, even smaller scale. I was trying to find some JV deals I could do I had some people that had money, they were willing to JV if I could find a great deal, but I was not finding anything that for me penciled out good enough. We were talking about before, trying to find the perfect deal. I wasn't looking for a perfect deal, but I was definitely looking for a great deal, because if now I'm asking somebody else to put money into it, it's got to be better than just an okay deal. If it was being my own, I'd be happy with a good enough deal. But if I'm putting somebody else's money into it, it's got to be a great deal for me to feel comfortable, did not have a fear of what if this doesn't work out, then they're going to blame me. And so as I was looking for that, having trouble finding stuff, and I started looking for myself. I was like, well, maybe I'll just invest in somebody else's syndication deal. So I started looking at all these different multifamily offerings at the time. And for me personally, I just was not impressed with the returns they were offering. The cash flows were too low. For me, my main objective was always cash flow number one. I wanted to get that cash flow, talk about forward, so I could have that income to pay for our needs and eventually get on my job, hopefully. So that for me, that was the most important thing. Is 4, 5, 6% cash on cash just was that's not good enough.
Not keeping up with inflation either.
That too. Yeah. And so I was like, there's got to be something better out there. As you mentioned, this time I was working from home. We moved from Omaha to Idaho. I was working from home at the same company long before it was the normal thing to do, I guess. Initially, when I was doing this, I was like, I do just listen to music all day long. Once I got into real estate, late 2016, early 2017, and I discovered Bigger Pockets. So I started listening to the Bigger Pockets podcast all day long while I was working. It's I'm going to absorb this information while I work instead of just music, right? So I was still listening to that years after buying that first deal. So going in from early 2017 to through 2021, I was listening to those Bigger Pockets podcasts and other podcasts. I started adding on to that all day long. And so one of these days in about mid 2021, there was somebody else on that podcast that talked about RV campgrounds, the high returns they could produce, the multiple income streams they have, not dealing with tenants and evictions because they're just guests that come and stay in short term, right? So I was like, oh, that's interesting, and for me, it was a couple things. I was like, I'm close to Yellowstone National Park here. I live, we're less than 2 hours away, right? So very big camping area. Most of my neighbors have RVs and go camping frequently. And so I was like, there could be an opportunity here. I was like, prior to this, I'd spoken to some of my neighbors in the past about possibly investing in real estate. Some of them are higher income earners, and I thought they might be interested in this, but no, they're afraid of real estate. They didn't understand it. All they saw was going on the news, which at the time was mostly eviction moratoriums and things happening. So nothing good at the time. And so they're like, nope, no real estate, not for me, no thanks. And as I started learning about these campgrounds and kind of investigating, I went back to some of those same neighbors who have RVs, and I was like, you guys go camping often, right? You go to the campgrounds around here? Like, yeah, it's a pastime, hobby, whatever you can call it. It's something I enjoy doing. So it's like, well, would you be interested in possibly investing in a campground, being a part owner of one? And that could be interesting, right? So I saw there was definitely an opportunity here for higher income earners that can afford to buy these kind of luxury items, that have money to invest, that may not invest in real estate, but possibly would invest in something they enjoy, which is campgrounds, right?
Something that they themselves enjoy. It's something that they can utilize.
Exactly, right? And so I was like, okay, there's definitely opportunity here. As I researched, I discovered that the high income potential, so these properties can produce double-digit cash on cash. So that was for me number one, is okay, this cash flows, they are matching what I'm looking for. First,
why is that? Why is it that RV campgrounds compared to other assets, the fundamentals of the business. Why is it
Yeah.
that it's a better investment opportunity than your traditional fourplex?
A few things, I guess. One, that it is a business. I mean, it's not just a rental property that somebody rents. It's a full-fledged business because it's got operations, you got staff, there's things going on. So, businesses are kind of somewhat easier to scale than just an investment property. And with that is also, I'd say, it's kind of like if you look at a short-term rental, like Airbnb, single-family home. If you take that same property versus a long-term rental property, same house, same location, in most cases, that short-term rental should produce higher income. You're renting more at a nightly rate than your monthly rate. These campgrounds are basically like a short-term rental at a multifamily scale. You've got hundreds of spaces that people are renting on a nightly basis, coming and going. So they are therefore producing higher income. Very similar to like a hotel. And you have that those price fluctuations. The weekends are going to be higher. Holiday weekends are even more expensive. So you have opportunities there to make a lot more income on that property. If it just be a long-term rental, kind of like a mobile home park or something that's just long-term stays. Yeah, so that's kind of the reasons why it can produce that much. In our case, for Beyonder, what we look for, we are still buying value-add properties. We're not just buying them turnkey, and they could do well just like that. But for us, the value-add comes in with mostly expansion. We want to add on more RV sites, cabins, additional amenities. Things are going to bring people there to come have fun and enjoy it and be willing to pay more to come stay there for those amenities and activities. So that's kind of what we do to help produce that income.
When you purchased your first RV campground, did it have an existing operation that was purchased? Because purchasing the land, obviously, which is great,
right,
because now you have an underlying asset there, but you have a business on top of that. And for someone that's, I come from the short-term rental industry, it is not, to your point, it's very much an active operation, and it requires on-the-ground team, it requires customer service. On your end, did you already purchase it with the assets on the ground, or you had to build that up from scratch?
So far now, our portfolio consists of existing properties that we buy them already cash flowing and just have that value add play to scale them and grow them. In most cases, they're like we call a mom and pop operators, right? Where they may have been the ones to build it, or they bought it at some point in the past to kind of live there on site. Maybe call it their retirement to have a way to have fun and have income. They don't have the resources to properly scale it or even run it efficiently. They kind of just do enough to be happy and have what they need. But there's definitely room to do a lot more. So yeah, we can step in, bring those efficiencies, bring the online reservations and all these different things to make it run better. Obviously, replace that mom and pop owner with probably 3 or 4 people because they tend to do multiple jobs, right? So you got to replace them with several people to do those different jobs or tasks, and then we can scale it up from there. We are right now in process of doing our first ground up development, so we'll be doing a brand new build. Intend to do more of those as well as time goes on here, only because it's at least currently in the current environment, the interest rates are still a bit higher. Insurance costs have gone up a considerable amount. And different factors, sometimes that the sellers are not quite ready to come down on their price to account for the interest rates and things, right? So kind of same things other people are dealing with other type of real estate. So for at least for right now, of course, we'll still look for those great deals. There's still some out there we'll find. But in the meantime, we're going to start just building our own, finding a great location, great land that has opportunity and demand and build them up, ground up from there. So we're hopefully doing our first one starting later this year and then do some more after that.
And I'm sure in terms of areas, you're looking for areas that are close to a lot of the national parks or areas that have high traffic in peak months where people just are camping. Has that been like your focus looking for, because I've seen this in the past. I think we spoke about this before. There was a company a few years ago that sprung up called Under Canvas. Different model, more of like the glamping short-term rental model.
Yeah.
And their whole play, they were very much first to market in professional glamping. They created all these campgrounds from the ground up near all the national parks, and that gave them a good foothold in the market and allowed them to later exit out of it.
That's also is a great place to look, maybe start if you need to. There's good and bad with that. Obviously, the people that have the land in those areas know that it's valuable. So, it may be difficult to find some land that would make sense, a large amount of capital to back you up on it. But we're definitely keeping that in mind. And to be honest, we have found some potential capital partners to help make that happen that want to do things like in areas like that. So that's to come, we'll see. For us right now, for at least what we are currently buying the existing properties, of course, we look in those areas as well, but kind of similar thing. Those areas are going to be higher priced because they know there's value in just that area. So for us, our main objective is to have a great location with great family-friendly amenities, right? It's going to get people out there. And ideally be within most a 2-hour drive of a major MSA. That way we have kind of that built-in user base that's going to come out there every weekend or every holiday or however often they want to spend some time away from home and have some fun, get out and enjoy the outdoors, go skiing or boating or whatever it may be if they're doing. That's kind of more important than just a place that gets hit high density for maybe a short amount of time. The summer months, those national park areas are just packed during summer. The rest of the year, maybe not so much, which is okay too. There's other things to do in the area, but that could be also a problem to consider. So we like to have that location that's close by that major population center to kind of have that consistent usage of the property as well.
I would think that your retention of clientele also is very high with this business model, because once you find a campground that you really like, you're going there, you make it a yearly retreat or a weekend retreat. So in that sense, the lifetime value of a customer, the potential for a very high lifetime value is there compared to more like one-time destinations that people go to maybe once or twice in their life.
Exactly. That's a great point as well. And on top of that, for at least for us, where our primary target are RVers, they're pulling their RV or whatever. We do, of course, have some glamping sites on our properties. We have cabins, tiny homes. There's even some tent camping sites, but the majority is definitely those RVers. And most of them these days with high gas prices are not taking big cross-country trips as much. You got a few, maybe your full-time RVers that travel around. But yeah, so a lot of those glamping sites do great because most people are traveling in their cars. They're not in an RV or something. So it's maybe more fun than to stay in a hotel. But for your big RVers, they want a place they can actually pull into and plug in and have everything they need there. So, and again, most of those aren't traveling cross country all the time, but most of them are willing to drive a couple hours to get out and use it and have fun rather than having it parked in their driveway, having fun with it. So yeah,
that's the other thing. When you have like an RV in your driveway, I feel like you're a lot more incentivized to use it, because you're like, well, if I'm not using it, then it's just sitting idle here, and we're not taking advantage of it. In that sense, I can see now why this is a good model. One question I have is, I'm not familiar when you're looking into a deal like this, is it priced based on land plus overlying business? So is there a specific multiple on the business that you're purchasing, and then the land that it's on is separate? How do people actually structure the deal when they're selling it?
So first off, most of the properties we buy, we don't buy through brokers. We're actually cold calling the campgrounds, trying to talk to those owner operators that are there on site, probably answering the phones. In most cases, they may not even know what it's really worth. We based on their incomes. Like, hey, if you're earning, say $500,000 of NOI after all expenses and everything, then yeah, your property's worth about $5 million or so is probably offering. So we try to stay around that 10 cap for our purchase price. Pretty much why we don't go through brokers, because ones that are listed through a broker will be like around 7 or something. So we want to have that bigger opportunity there to have that buffer for the investors, right? To make sure we have enough to get them paid and have more upside on the back end when we eventually maybe sell them. So we can then list it with a broker for, a 7 cap or something. So, we base it on that income. That's kind of the bottom line for us. And when we, of course, do an appraisal to get the valuation or the cost segregation study, right? They'll value the land separately from everything else, but it really doesn't really come into account too much, right? Other than unless we're buying raw land to do something on. So it's just more of the overall business, including the land. If it's the business is producing the income, then land is part of that value.
In terms of the actual process of finding deals, are you the one that's personally cold calling these people? Have you assembled a team of cold callers to do it? How are you delegating that? Because you could be on the phone all day just dialing away, looking at people. Did you do that in the beginning and decide, I'm going to delegate this to someone moving forward?
Yeah, so luckily, no, I have not done that. I contacted a few myself, like at least ones that are close by in my area, ones I can actually go to and see them in person and say, hey, I'm local, right? So I've done a few of that, but most of it, luckily, we have guys that aren't afraid to do that, to be told no 1,000 times a day before they find the yes, So yeah, we luckily have our people that just do that. That's all they do is, and I wouldn't say it's all 100% cold calling. We do get oftentimes, leads that come through. At this point, our name's out there enough. We've been on enough places that, people come across something, they'll think of us, they'll send it our way to, hey, what do you think about this? So we've got, we'll say regular average Joe people that are find something, or they see something, they'll send it to us. Got some people that are RVers that visit campgrounds, and if they hear it's for sale, they'll let us know. We get brokers that send us stuff too, which most of the time, again, we tell them it's like, thanks, but no thanks. And then we, of course, in a few different groups of Facebook groups and things that have campgrounds for sale, and there's wholesalers that have them as well. Go through all funnels and process to try to find the diamonds there, but it's still a process. I mean, there's not every property is going to be a good deal. Not everyone's going to fit our criteria, so you definitely got to go through a lot to find the ones that are worth pursuing. The one advantage we have is that they're campgrounds. It's not like like, trying to find a multifamily property, you got to kind of search for them, I guess. But in Campgrounds case, being that it is a business, they are advertising in most cases. They want to be found. We look through resources like something called Good Sam, which is like a directory for campgrounds, right? So we kind of use that like our phone book. Open it up, say if we're looking for a property in, say, Georgia, I'll open up to Georgia, what campgrounds are there, kind of go through the ones, try to find the ones that look to be the right size for what we're looking for, and then call them up and compliment them on how great their campground is. Of course, look them up online first, but compliment them on how great their campground looks and their reviews, and open a discussion to see when they're thinking about selling. If you just ask them, hey, would you want to sell? They're probably going to say no to start with. So you kind of start a conversation, just let them think like, well, when would you think about selling or something like that, to kind of make them think about the future at some point. Yes, at some point they're going to want to retire or get out, and their kids may not want to take it over or whatever. So yeah, it's just getting that conversation started. And sometimes, just build some rapport, and it might take a year before they come around and say, we're ready to sell now, So
we can speak a little bit about the service-based businesses out there, the demographic shifts that's occurring right now, but I'm curious about the specific niche. Are you seeing that it's a lot of older people that have had this for decades, and maybe like husband and wife, they're in their 60s now, they're probably looking to retire? Is it those people that you're going after because it's just the perfect timing for them? Have you seen that demographic trend in terms of the people that you're trying to purchase from?
Yeah, I wouldn't say we're necessarily targeting them specifically to buy, right? We'll buy from anybody that has them, but I'd say the majority that we've bought from, they're selling for one of two reasons. It's either, yes, they're getting up in age where they just don't have the energy to do it anymore, or two, there's some kind of health issue that's come up. We've bought some properties from young people that have only had it for a few years, younger than us or so, but some kind of health issue arise, and they're like, what, we just can't do this anymore because we physically are unable to now. So there's pretty much the only two reasons people most would sell, because otherwise, why would they get rid of this great cash flowing business that they enjoy? It's either because they're just burnt out, can't do it anymore, or just don't have the health to do it.
I've seen that with bed and breakfasts. A few years ago, my partners and I purchased land in the Smoky Mountains right near Dollywood. Like, perfect location. Right next to the property was a bed and breakfast. And if you know anything about bed and breakfast, it is so hands-on. It is something that very, very much different from traditional hotel. It's a lot more hands-on. You have to offer more services. And we spoke to the owner, and the owner's like, I've been working here for the last 30 years. I'm here every weekend. I'm here every day servicing our guests who, for all intents and purposes, these are couples. So their expectations are very high. The wives have high expectations. And one of the things that he said is like that it's hard to get a good buyer because it's such a hands-on business. Yeah. Because it's very intimate. Not many people want to invest in it because it's not scalable. You can't just buy multiple bed and breakfasts like that. Or if you are, you need a really good team in-house to take care of it.
Yeah, for sure. That's very similar to this, like you're saying, is that they bought this because, they started it because they thought a great fun way to have their retirement and take care of the income, but not realizing it's going to be as much work as it is, that the point where they feel like they can't step away, they can't take a vacation because who's going to run it when they're not there? It's going to fall apart. So very similar to that kind of situation with the bed and breakfast. Yeah, it's just you're pretty much in it for life, unless you can hire people to manage it and take it over and step away. But most people don't, because they have that they're too close to it, that they feel that they can't trust it to anybody that would want to do it. And unless it's like their kids, in most cases the kids don't want to do it either, because they're like, nah, that's not for me.
They see the pain their parents went through in running, and they're like,
yeah.
In terms of exit strategies, do you guys hold these for a number of years and then decide year 5 we're going to sell it, or you're holding for the long run, like short-term versus long-term philosophy on holding these assets? Where do you stand?
Intend to hold them forever, long-term. But we do, of course, want to get our investors their money back, which is, most cases people want their money back to keep reinvesting it. So the goal is by around year 5 or so, we want to refinance the property to be able to pay off all the investors, get them their capital back plus the equity they've earned in the property, and then hold those long-term to scale this hundreds of properties eventually. However, we're also not opposed to, if the markets go crazy and big equity firms are paying, 3 times what they're worth, then sure, we'll sell them. We'll do whatever makes sense to get the most back for our investors, but the intent is to hold them long term and then pay out the investors around year 5 or so. But we're open to options though, if it makes sense. It's just people that have been in commercial real estate know in the last few years, like 2021, it seems like people were way overpaying for multifamily properties just because they want to get a deal, and it doesn't matter what, because it's going to keep going up no matter what. And so people were overpaying for those properties, and of course now in a bad situation, most of them. If someone's willing to overpay what it's worth, then sure, we'd probably sell.
Service-based businesses. So you guys are starting to look at purchasing plumbing companies, HVAC companies. So you're kind of getting out of that a little bit out of and looking at general businesses that offer active income? Is that something that you guys have been pursuing?
Well, so that's me pursuing, right? So Beyonder is still strictly RV campgrounds, outdoor hospitality, marinas, those kind of things. So before, I'm always constantly searching for great deals, right? I'm opportunistic. I don't say I'm only going to do this and nothing but this. If I see great opportunities, I want to find a way to get involved and pursue it, because there's lots of opportunities out there, and I don't want to ever one day be like, why didn't I take advantage of that when it was there? So I get involved with a few different things and try to luckily divide up my time accordingly between each. And luckily, I can find partners that are able to do all the main operations of stuff on each of these, so I can focus on doing some like social media marketing, talking to investors, and going on podcasts and things like that to promote those. So I'm actually with another group that has been in real estate for over 20 years, but are making a shift because they've been more focusing on your standard multifamily and single family homes, that kind of stuff, due to those same issues we've been talking about in the last few years where just the numbers don't make sense anymore. They've made this shift to kind of more focus on service-based businesses, and something that they already have experience with. They've created their own businesses and they've bought some businesses along the way over time. So now they're like, let's create this fund to have a consistent income from these businesses so people can invest in it and not have those fluctuations or possible fears that have happened with real estate. You'll have this steady income from these businesses that are already producing great income, but we can scale them up and make them do even better. So focusing on buying things like HVAC, plumbing, electricals, landscaping, all these kind of things that are considered essential businesses. So like, during the time of COVID, a lot of retail places had to shut down, but the ones that stayed open were your essential businesses that were still able to service people's needs and keep people safe. So if your heater goes out, you can't say, sorry, we're closed. You got to have somebody come and fix that. So they're focusing on buying these businesses are able to produce very high income, kind of targeting 12% preferred return with, average targeting of 12 to 18% annual income from those. So that's something else I've found recently. And I think it's pretty exciting that I'm like, going back to my original thing is like, I'm always about the cash flow. If I can find something that produces high cash flows and I can get some diversification, then it's good for me. I think diversification is good. And that doesn't mean just different multifamily properties. It means different types of properties and everything that are non-real estate. So this is one of those non-real estate ones that to me makes sense.
Well, you must be surrounding yourself with very good managers, because the thing is, like, you can look very good on paper, and you have a solid business plan of how you're going to add value to this business. But if you do not have the team on the ground that can actually execute on that, those numbers, those projections mean nothing. So I guess the question is, like, have you had to change how you look at purchasing a business based on who is actually on the team that is managing that? Who are the people on the ground that are taking care of that? When you're purchasing, let's say, an HVAC company, or a plumbing company, one of the factors that you have to look at is, like, if you purchase the company, does the staff come with them? Are they going to leave? Are they going to stay? When you look at a deal, what's your battle plan to ensure that once you take on that company, the team on the ground is actually going to stay and you actually have resources that will add value to the company?
I guess, first of all, in that regard, as far as the staff, employees, it's not too different than the RV campgrounds, because when we buy a campground, there's already staff that's there as well that we want to make sure is still there for day one, because you can't go out and just hire everybody brand new and expect them to operate it, right? So you want to keep those people that are already there on board and happy, right? So it's kind of a simple process. Before we close on these campgrounds, we go and actually talk to those employees, do a personal interview and give them a personal invitation for employment once we take over. So let them know they still have a job. We still want them to show up the next day. So for these businesses, it'd be kind of a sort of a similar process. It's probably maybe most part be less noticeable for them, honestly, because that we're buying these established businesses that may have dozens, if not hundreds of employees. I guess in most cases, we're buying businesses that the owner is not the one that's the main operator of the business, right? So he or she has to be easily replaceable, right? So it's not a sole proprietorship, or if they're not there, it's going to fall apart. So in most of these cases, you have like your company CEO and different managers that are already there operating stuff. The owner is maybe out of the picture anyway. There's not really doing much other than checking in once in a while, having some meetings here and there, but they're not operating the business for the most part. So if a new owner takes over, the organization is really going to see much of a difference. The lower level staff probably won't even know it's changed hands. For the most part, we're going to make sure that those businesses are going to, those employees and staff are going to stay there. They'll know they still have a job. And in most cases, people aren't, if they're happy with what they've been doing, they're probably not out looking for a job. They'll wait and see if the new manager is going to be mean or not, so they'll wait and see, I guess, and stay there. So that wouldn't be much of an issue. And the big thing, like you said, as far as like having people that, on the team that know what they're doing, it's not any different than if you're looking at a real estate investment. You want to make sure that the people doing it know what they're doing. They have experience. At least somebody on their team has experience, that you're not stepping into something with somebody that's never done it before. In our case, the partners on this group, they've built some business from the ground up themselves. They've purchased and managed several different businesses. So the operations side of it, they understand, they know, but they don't even that. It's may be a small scale for like a track record for some people that may want to invest in something like this. So we've actually partnered with another guy. I'm not sharing too much details on this yet because we're still kind of forming all this stuff to have it ready here in the next couple of weeks. But definitely if someone's interested, reach out to me. I'll happy to share more. But we're actually partnering with another guy that has done thousands of business, M&A transactions. He's written several books on the topic on all different things. He's even got a book on HVAC businesses specifically. He has that experience and track record that we can have to back us up and say he's on board with us. He's part of this. We'll lean on his experience more than our own. So that's great to have that high level experience. And I'll say this is a guy that was just a week ago in a room with some of your Shark Tank members from the TV show, the same room with these guys. So he's a high net worth guy that has this fantastic resume of doing thousands of business transactions over the last few decades.
This is the value of, in this day and age, of being active on social media. If you have a presence online and a community, that's how you get people into the door to do deals like that. So kudos to you on that. Here's a little, I guess, to wrap it up, pop question here. What is the single most or single highest return deal you've done in your life so far?
That's a great question. Let's see here. Are we talking dollar amount or just percentage wise?
Percentage, yeah.
Percentage wise, I don't know if I'd recount this one, honestly. Percentage wise, before I got into real estate, I said my more stock investing background stuff. I was playing around a bit, back around like 2008. I bought a few penny stocks that actually had thousands of % return. Some of those did very well, and a few others that still did. In fact, when I bought that fourplex, aside from my 401k that I borrowed from, I had some money that from stock that I'd bought. I want to say at the time, I think it was Tier 1, which, at the time I bought on discount for, I don't know, like 60 cents a share or something. And then later sold them at like $10 or $12 a share. Right? So I did pretty good on all those early stocks. And unfortunately, it wasn't a lot of money because I didn't have a lot to invest at the time, but something these get started to give me some money to use later for that down payment. But aside from that, in real estate specific, there's probably there was a wholesale deal that I got where I had, well, sort of a wholesale deal, I guess, but I made like $50,000 on something I put $0 in. So it was pretty good. At the time, it was like prior to getting into the commercial real estate stuff, I was like, yeah, that was pretty sweet. I was like, I got money out of nothing, and it was a decent amount. So that was probably one of my early on motivators that said, okay, there's definitely money can be made in real estate, and even if you have no money, you can find ways to get started with no money or very little money. Just if you get creative and be willing to put the work to find some opportunities.
You come across to me as a guy that is not so much in it for the money anymore as it is for the fun of pursuing these deals and rolling them up and building a community with people that have the same mindset as yourself.
Yeah, I think that's fair to say. I mean, I still need money. We still have, living expenses, and I find enjoyment in finding great opportunities and then sharing those with people. I want other people that are like me, because I know as I've been spoken with, I don't know, hundreds, if not thousands of people in the last few years now. We often talk about, again, like I mentioned here earlier on when I was looking at these other syndications that the cash flows were just really low. 2x equity multiple over 5 years isn't really that great either. And people oftentimes, they agree with me, like, yeah, I feel the same way. I've seen the same things, but there's nothing else out there. What are you going to do? And so I'm like, well, I'm here to say there is other things out there, right? Things that you're not familiar with because you don't see, not everybody's doing these, so it's hard to find these rare gems, I guess, that do exist. So I'm like, if I find them, I'm happy to share them with people to help open their eyes and give them opportunities for things that they may not have found otherwise, and not feel like I would have felt. What really kept me from investing in those deals back then, just aside because the returns weren't good enough for me, is like the opportunity cost. I'm like, if I put my money into this deal getting this low return, and then something better comes along here in a couple months, I'm going to be really upset that I don't have that money to invest anymore, and I'm now in this not so great deal that I got to wait for and hope that it actually delivers, So there's people like me that are looking for cash flows, looking for higher returns. They just don't know where to find them. And so I can put in that effort and find those opportunities, then and share them with other people so that they can participate and find these gems. And then that's good because I'm happy to help them, but also it helps me because then they know that they can come back to me I'm the one that's always finding these unique opportunities, So,
well, Don, I really appreciate you coming on to this episode of the Sip and Scale podcast. This is the first time we're having someone in such a niche investment opportunity as RV Campgrounds, and I wish you the best of luck. I may even be an investor in the future in some of these deals. So I really appreciate you on here. Would love to have you back in a year and see where you're at.
Yeah, that'd be great. I appreciate it. Thank you.
Awesome. All right, guys. Thank you for watching. We'll see you next time.